There is no way to do what needs to be done without short-term pain. It will be significant for a lot of people. People who have depended on government, they're going to feel the most pain because they're going to lose that government support because the government is broke. So for the government to relieve the economy, it has to stop all those subsidies. It has to stop all those payments. But if we're going to invest in building factories, in reconstituting supply chains, it's going to take a lot of investment to get back what we lost over the last several decades. Where's the money going to come from to do all that? So we have to save our money so that it can be used to finance this reindustrialization. You can't spend and save the same money. It's one or the other. So Americans have to stop spending. But the whole economy is based on Americans spending money. Most people's jobs are a byproduct of people spending money. Well, if they stop spending that money, then those jobs go away. And so we have a massive recession as we have to go from a borrow and spend economy to a save and produce economy. Interest rates have to go way up. They're too low. That's one of the reasons that we don't save. And that's one of the reasons that we don't produce, which is why we import, because we don't have the factories, because we don't have the savings to finance the investment. So how do you get more savings? Higher interest rates. Higher interest rates reward savers. Hey, I can put my money in the bank and I'm going to earn all this interest. And higher interest rates discourage borrowing. Oh, I'm not going to borrow money to buy something. I'm not going to go buy a new car if a car loan is 15 or 20%. I'm just going to drive the car I got. I'm going to put my money in the bank. I'm going to earn. So that's what has to happen. But when interest rates go up, now a lot of the debt that was taken on when rates are low, the borrowers can't afford the higher rates. So there's a lot of defaults, including the US government. If interest rates go way up, which is what they need to do for us to reindustrialize, that means the US government has to default on treasuries. So that's a big deal because the US government, there's no way the government could pay the interest if interest rates went to, let's say, 10%. It's just not even feasible. So they have to default, but nobody wants to do that. So if we're not prepared to default on treasuries, then we can't let interest rates go up. And if we can't let interest rates go up, we're never going to save. And if we're not going to save, we're not going to build factories. All the things that need to happen will never happen because of how politically unpopular they are. It's a foregone conclusion that we're just going to destroy the currency and then they don't have any choice. Then it doesn't matter because once the currency has no value, it doesn't matter how much of it they print. It doesn't matter if they say, oh, we're going to increase your Social Security, we're going to increase your welfare. It doesn't matter. If the money doesn't buy anything, what difference does it make? I can have $1 million worthless dollars. I can have 10 million worthless dollars. I don't have any.